Second, there's another camp of investors who are trying to game out the election. Oh, boy. Specifically, this group wants to price in the possibility of an Elizabeth Warren presidency. Now, Warren has started to edge out Joe Biden, and she's no fan of certain industries, especially the managed care ones. You know, I could have done another. There's so... Stick with me on this, because let me just I'll deal with the managed care in a second, but it's really rather extraordinary how bad they are. See, for instance, today something happened that I haven't seen in a long time. There was an analyst, and as he came out, a good analyst, and said that he had for the first time in 20 years, he had a buying opportunity, the best he'd seen, Cigna. Okay, I read the piece. I said, how much is Cigna going to be up? This is just it is going to be so good. But then I realized if Warren's the front runner, you don't want any exposure to the health insurance space. So what happened? The stock got hammered rather than rallying. Best pick in 20 years. Best pick in 20 years, and look what it does. What can I say? I guess you picked the wrong day to recommend Cigna. It closed down $5.43. If Warren can really pass something like Medicare for all, a very big if, then the managed care companies, you know what? This is going to cease to exist. I find that to be unbelievable and not true, but that's what people are thinking. So then why the heck did I tell people of the ActionAlertsPlus.com club that they ought to buy United Health, my favorite of the managed care plays? Well, okay, there's the fact, first, I've never seen it cheaper. Then there's the fact that it now actually supports a roughly 2% yield. I've seen that in ages. Then there's the fact that UNH is about as oversold as any stock I can recall, down more than 70 points from its highs. Mostly, though, we don't even know if Senator Warren's going to get the nomination yet, let alone win the presidency. And even if she does win, that doesn't mean she'll have the votes to pass single payer. I think it's too soon to count out UNH. It's too soon to write off Cigna. I think that's wrong. These companies are queening money. Still, that doesn't change the fact that Wall Street is terrified of a Warren presidency, and you can see that fear everywhere. Ever since Warren started pulling away from the pack, I mean, she's now viewed as a putative leader. Very good article about her being in the front today. Well, we're seeing aggressive selling in the market's biggest winners. And hear what I'm talking about? Twilio, we had Jeff Lawson on last night, Amazon, Cramer Family Fave, Okta. Why? Because if you own these stocks, you know what you have? You have huge gains. And you know what Warren wants to do? She wants to tax those gains. Tax those gains at higher prices than you currently have to pay. Now, again, this is just one possible outcome. The people who own these stocks, they want to ring the register now, just in case Elizabeth Warren raises the capital gains rate to the same as the ordinary income rate. Between the recession fears and the need to price in the possibility of a Warren White House, I think we could get more swoons like we had this very morning. But hopefully the sellers will exhaust themselves like they did this afternoon. Still, as long as Senator Warren is leading the polls, you're going to keep seeing winners being sold, and they're going to be really sloppy days. And you're going to be asking me on Twitter, Jim, what's wrong with this thing or that thing? And it won't be Micron, which had a quarter that disappointed. It'll be something that's doing really well, like Twilio.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.